And you're seeing a lot more interest in the commodities and the energy sector. So let's have a listen to see what Peter says about that.
Well, exactly right. You know, when you're thinking about retail land, it's just a wonderful market to trade. You can see what's happened over the last 2 weeks. Huge volatility, and that's really what a trader's after. They want movement, and that's been demonstrated if you look at the hedge funds and money managers over the last 2 years, their cycles, and the retail land is just all over it. So I think that their appetite won't wane, and it's actually picking up with the advent of technology and in the sense of Facebooks and if you're talking about LinkedIn, social media is such a large broadcast to the greater world, and people are very conscious of it.
Do you actually think that the interest from the retail investor and from the players on that level has actually increased? When we look at the oil sector, for the most part, was a very specialist sector, I think, for a long time. Perhaps the general public wasn't as informed. You look around this room here and we are seeing so many more people from the BBC, from general media. It's not just the specialist media anymore. And again, as you say, social media driving this. How important has that shift been in actually bringing in the retail investor?
Well, I think, you know, we're very conscious. You've got radio and TV telling us what WTI closes and Brent 4 and 5 times a day on each station in Australia. Now, regardless of where you're positioned, then you look at a newspaper, then you look at social. So we're really washing over those intricacies as far as market price. Secondly is fundamental analysis. People are conscious as far as OPEC and what's going on. Seasonality plays a part, and hurricanes and, of course, drawdowns. And then we're looking at technical traders. So technical traders are really all over it as well because they see the Bollinger Bands, they see movement, and they really look at, you know, what's going on in the market. So I think it's got a very, very large attraction, all of the commodity sector, and more importantly, crude oil.
And it's great to actually have the opportunity to talk to you because, quite honestly, we sometimes don't get... Well, no, it's not that we don't get hold of you. You don't show up. I mean, again, it's been that interest that we're seeing from key people like yourself, the CEO of a major trading house, coming to us from Australia, coming from around the world. I've talked to some other traders here. Some will talk, some will not. But why the interest? Why not just sit back and listen to what's going on? Why do you need to be here? Tell us how that has shifted, because we didn't see you a few years ago.
No, well, exactly right. I was here last November and I realised the importance of the meeting and what's it all about. Because when you dive very deeply into the dynamics of OPEC and what's going on as far as players coming on going in the sense of Russia and new I suppose new players entering in the sense of the global arena. Looking at the shale revolution, people are conscious of that, and we've seen a very, very large uptick as far as shale and increasing on Baker Hughes rig numbers week on week. So all of those factors are very important to a trader, and we try and give our trading community, we've got over 1 million clients, a large composition of information and news, and more importantly, access to global markets. And that truly is the appetite of the world today. They want to be across it.
Well, now, on the one hand, you'd love to see volatility on a day-to-day basis, on an hour-to-hour basis, if we could deliver that. And there have been times, without a doubt, I'm sure you've had some great days for a trader that perhaps maybe weren't as, might have been a little frightening on the producing side. OPEC and all the key producers are looking for stability. Stability doesn't really make you too excited every day. So how can we maybe find that balance? And has there been enough volatility in the market? Because it will always be there in terms of keeping the trading community happy and somehow maybe having a win-win for everybody.
Well, if you're looking from a retail perspective, if a market's not moving, they can quickly exit a market. And if it is moving, they can enter a market. Now, there are plenty of markets to look at. As far as FX, you look at gold, you look at different commodities, of course, and then bond rates. So really, there's an appetite out there, but more importantly, you've only got to find the right moving market, which can happen very, very quickly through to geopolitical, the unknown, South Korea, what's happening as far as President Trump. All of those components have washed over the market in the last matter of 2 to 3 weeks, and they're very important criteria, and that's really through news and social media. It distills that information and then the marketplace digests it.
Now, also in the last few years, I think we're beginning to see the OPEC research division, all of the key OPEC players here, and holding some more conferences and having a stronger dialogue too with the trading community. How important do you think it is that perhaps both sides are better informed?
I think absolutely. I mean, there's total transparency when you're coming to information and news, because what's gathered from this afternoon, you've got to come here to yourself, and this is what I really gleaned from the last meeting. The information that comes over from the ministers, from the President and so on, and the Secretary-General is so important, but more importantly, there's no secrets. So Bloomberg discussed it, CNBC, Reuters, Al Jazeera, it's across every network in a matter of seconds, and the man on the street has got that information, and woman on the street. The ladies really, and this is a very important part, females are the owners of wealth, there's no doubting that, and the other side of it is they see markets that are moving, and they're very smart in the sense of trading. They're far less emotional, and they're very, very mindful from a risk perspective, and that's why they're very much across these markets.